Hello, ladies and gentlemen, and welcome to episode 20 of Kenya's Market Map. Thank you so much for joining us on this episode. I'm your co-host, Kigen Kiplimo.
And I'm Easter Fanning.
Yeah, so Easter,
Yes,
beginning, what's your highlight? Or highlights?
Real fast, yeah. Once again, thank you for joining us Okay. No, thank you for again walking the journey with us till this moment since we started. And yeah, for some reason I felt the urge to appreciate that, to make it public that I actually appreciate that. That's something I'm cognizant of. You wanna reiterate something about that? Did you feel touched? And so you want to?
Yeah, I feel touched. I mean, it's episode 20. I mean,
yes, sir.
20.
Yeah.
More to come.
Yeah. So proud of us. Proud of you guys. For happy about you believing in us. But anyway, now delving right into episode 20. My highlight for this week has been the CMA, Capital Markets Authority, Kenya, issuing the Soundness Report.
Yeah.
Yeah, the latest one. They issue it quarterly.
Yeah, it's quarterly, so I think this is for Q4
of 2021. Q4 2021.
Yeah.
Yeah. So again, nothing, I would say nothing out of the ordinary, nothing you wouldn't expect. You wouldn't have expected anyway.
Yeah.
Yeah. So it was just validating what we had, the assumptions or presumptions we had before.
Yeah.
Yeah. So the economy, the state of the economy performance, looking at macroeconomic factors like I was about to say depreciation, I don't know why, but inflation rate,
depreciation of the assets in the country,
of the shilling.
The
shilling. Yeah. That's touched there. Yeah.
What stood out for you in that report?
As I've said, nothing was in
outside
there
of what you had expected.
Yeah. Again, that could be there could be a bias there because this is the type of information we consume on a daily anyway.
Yeah.
So it doesn't mean I'm not looking to underpin or to not underpin, but to undervalue the essence of that or the importance of that report. But I'm just saying it didn't add as much value to me personally.
Yeah, I think something that I was keen to find out from the report is actually the day trading that kicked in in the last quarter of last year. That is at the Nairobi Securities Exchange. And I saw that it's still contributing a small component of the trading at the NSE, but then it's a few months old. So this year we are yet to see. I'd expect more growth.
You know, the factors they mentioned there don't even give you hope that with the time it would grow.
Why?
Because
Why
they
do you
said
say
it's
that?
not doing well because of lack of information.
Yeah.
And too high cost. The costs associated with that are
absolutely
very high.
Yeah.
So those are not things that would
so
change
the first point about people knowing that it exists and sensitization, I think that can be addressed with time. That is a factor of time.
Is that what is it a factor of time?
I mean,
are we sure that Kina Joffrey are going to take it upon themselves?
Of course they have to put in the work. They have to put in the work.
Yeah. Plus, what they meant by information is not that people don't know that it exists. They don't know how to use it.
Oh, okay.
Yeah. So that's something that is your personal curiosity that will get you to know it, and that's not a function of time. Yeah. So,
granted.
Yeah.
To some extent.
The other one?
That's I think one of the things that I was keen to check from the report. Yeah.
The other one, what I meant by the other one was the associated high costs of trading. Trading.
That they have to do something about it because there's only one way around that, which is cutting the cost, of course, to attract more players.
Yeah.
I don't see any other way to fix it.
Okay.
Do you?
No. As at now, no. But maybe with time I might have another.
Okay.
Yeah. The other thing again that maybe I'd say didn't stand out, but I feel like it's important for me to mention is the fact that the issue with capital flights. There was they issued a list or a record of the equity capitalization in the NSE. It shows how much people have invested in the NSE. It's been reducing. Quarter 1 it was very good. Quarter 2 very good. Quarter 3 started reducing. Quarter 4 started reducing. Now these are people, as we said, the bulk of the investors in the Nairobi Stock Exchange are
international.
International players. So people are sort of like taking measures to brace themselves for the oncoming elections and the uncertainties that come with that. You guys are checking.
Easter, do you ever feel that the talk about elections, in as far as the business environment is concerned, just the talk itself has a huge negative impact than the election itself.
Actually,
just the talk, the narrative around it, that things might be bad because of elections. That narrative itself is far much worse than the election itself.
Yeah, exactly.
And I think we should start reducing that talk.
How do you do that? Because I feel like it's been reducing.
I mean, it's the same way.
If you start comparing it from 2007, how things were, how politically charged the Kenyan political scene was.
Yeah.
In 2007. As we come to 2013 and now, I feel like it's been reducing.
It's a positive track, and it's across the board, because I remember there was a time, I think last year in the US, one of the major pipelines, I think, so the way it's so pipelines in the US that is for petrol oil is so much digitalized that someone hacked it. Okay, and interfered, with how the pipeline operates. And so the fear of that fuel will be scarce. So everyone went and bought gallons and gallons and gallons of fuel and stored it because of the fear. So the fear of a shortage of shortage coming did far much damage than the shortage itself. So this is the same case that I'm talking about the election, that the narrative is far much worse than the election, that when everyone is talking about spending will reduce and what that narrative is far much worse.
It reminds me of expectations being a factor that contributes highly to inflation.
Absolutely.
Like, people can be
than the actual increase in prices.
Exactly. What happened in Zimbabwe, people went to sleep with the price of bread going for 50 shillings. This is an example. Then the next morning, it's 70 shillings. That's the actual price increase, right? But because he changed it by 20 bob, guys were like, okay, now here, things are bad.
Tomorrow it's going to go up by 40.
Exactly.
Yeah.
Then because of that expectation, it doesn't go by 40, it goes by 80.
Oh, yeah. Because now there is that increase that was expected, another expectation that multiplies it by far.
Exactly.
Interesting stuff.
What was your highlight?
My highlight is actually having the IFC boss, Diop.
Mr. Diop.
Diop. coming into the country this week. He was in Kenya for 2 days. Then he went to Tanzania, I think, for 2 days. I don't know where he went after that, but I think this was it was an interesting moment having him in the country. Of course, he met the president, and then he met the CEO of Cooperative Bank. Then he also met Twiga Foods. They've invested in Twiga Foods.
Really?
Yeah. IFC is one of the investors in Twiga Foods. So for those guys who don't know, Twiga Foods is they work in the food supply chain. We've talked about them in the podcast before. You can go and check them out. I believe that they're doing amazing stuff, revolutionizing that.
Can I blow your mind about Twiga now that you've mentioned Twiga?
Sure.
I learned something yesterday that globally, on a global platform or scale, the business of bananas is as big as the business of airtime.
You're kidding me.
I'm not.
So bananas, but I mean, airtime is consumed more than bananas.
Exactly, and so are bananas. Sorry, in this market.
Or in the African market or the Kenyan market?
No, what you're saying applies to the Kenyan market, where airtime is consumed more than bananas. Right?
Yeah.
On a global level, they actually match up.
That's interesting to know.
As in, these guys, I was just wondering why Peter Njonjo left Coca-Cola.
Yeah, Peter Njonjo is the CEO of Twiga Foods.
Sorry, I'm making a lot of assumptions. I'm sorry.
No, it's not assumption.
I was assuming they know who Peter Njonjo is.
Oh, okay.
Everyone knows who Peter Njonjo is. But he left Coca-Cola, a very high-paying job.
Right? Yeah. He was one of the top managers there.
Yeah. He was the boss.
Yeah.
Then he came to Twiga, a startup then at that time. So what is it that this guy had seen?
Yeah, he had seen the huge gap there, and I think there's a guy called Grant Brooks. He's also one of the co-founders there.
At Twiga.
He's a gentleman from the UK. They've been working together. So I think they identified that gap in the value chain, and I came to saw that gap in 2019. We think in 2020 when I was learning about Twiga.
Because you see, you walk around, you're in a vehicle, you're commuting, or you're just moving, and you see hawkers hawking bananas everywhere. But it doesn't occur to you that there is no consolidated or structure around this. Consolidated mechanism of handling this.
Absolutely.
then Twiga comes and they offer exactly that.
Yeah,
so big.
So the IFC boss was in Kenya.
Yeah. Oh God, sorry for
he met the Twiga food guys.
Yeah.
Also met a bunch of entrepreneurs in tech.
Yeah.
And I think that was a good moment. And for the people who happened to have meet him, I think it was a luncheon. I think it must have been a good experience. I would have loved to be there. It was an amazing experience. So the thing that stood out for me is I'd never for the life of me put IFC and art in the same sentence.
Why?
Because so I was really intrigued that the IFC boss is really focused on investing in art in Kenya. And he actually has a podcast that he did with Sauti Sol. And he himself plays the electric bass guitar.
Okay.
So he's really focusing on investment in art, and particularly for young people in Africa.
Yeah.
Whether it's music, whether it's the film industry, performances and all that.
Yeah.
And I think, wow, this is amazing, because I'd never imagined, IFC is known, you think about energy, infrastructure, never really think about art. So wow, I loved that. That was my highlight of the week.
Do you think there's a bit a digress from that?
Okay.
Actually, not a digress, but do you think that in the corporate sector, the boss gets to control a bit of what you guys do out of your core business? So, for example, your CSR projects.
Yeah.
The boss's personal passions are very likely to be what the organization might end up doing.
No doubt about that.
Yeah.
Let me give you an example.
Look at Safaricom.
Bob Collymore was a big fan of jazz.
Jazz, yeah.
And that's why Safaricom,
jazz festival.
Absolutely.
So now you, maybe IFC and art might not be the same thing.
Oh, but since Diop plays bass guitar and is a fan of music, so
which is why personality is important, even when looking at the leadership of an organization.
Yeah.
When you start looking at such factors, that your personal attributes and interests have a way of showing in the business, then you might, as a shareholder or as a decision maker, you might want to look at some of these things.
So I'd love to see probably a boss who brings up something that's not probably a sport that's not really popular among many Kenyans. So probably if James Mwangi is a fan of cricket, and now Equity Group starts doing cricket events and everything.
I don't know what will happen if you guys elect Gideon Moi.
Oh, he's a big fan of polo.
Exactly.
Yeah.